Kia ora and welcome. Auckland's growing rapidly and that's a sign of our success. People want to live in a city that's interesting, diverse, beautiful and has lots of opportunity. But there's also a downside to growing by 45,000 people a year. That sort of population pressure is making it difficult for infrastructure, for housing, which makes housing less affordable, and it's putting a lot of pressure on our transport system. We're facing growing congestion. We need desperately to invest in more housing and transport infrastructure. But that burden shouldn't just fall on Auckland ratepayers. Our main source of revenue as a council is your rates. But I want to keep rates at a reasonable level, somewhere around 2.5%. So what we're trying to do is broaden our sources of revenue. We're talking about a visitor levy. We're talking about a targeted rate on large-scale developments. And we're working with government to try to find a way to get revenue from road pricing to meet the needs to ease that congestion. We're also addressing really important social problems, the growing homelessness that we see around our city. We need to make sure that council's own staff who are low paid can afford to live in this city, get a living wage. Council wants to be open, transparent, it wants to be accountable to you. So we're seeking your feedback on our annual budget. Please read the document that we're putting out and give us your feedback about what you think about our proposals and what we in Auckland need to do. Thanks for your time, thanks for your effort. I look forward to seeing your submissions and your comments on this document.
We work hard to strike a balance between keeping rates rises minimal while sustaining the investment levels needed to maintain, improve and deliver new and existing services to Aucklanders. For this annual budget, we've got 3 options for the level of rates increase in the next financial year, each impacting on our ability to deliver services and investment. Option A, 3.5%. In our 10-year budget, we planned a 3.5% rates increase in 2017-2018 in order to pay for the services and investment acquired in Auckland. This level of increase would equate to around $1.55 a week for an average value residential property. However, in the latest review of our budgets, we identified additional savings that will allow us to deliver the same things we had planned for about $15 million less. That means that if we keep the increase at 3.5% and use the savings we've identified, we could deliver all our planned investments and invest even more in things like transport, walking and cycling infrastructure and sports field development. Option B, a 2.5% increase. By using the $15 million of additional savings, we could increase rates by only 2.5%. This would work out at around $1.10 a week for an average value residential property. This level of increase would allow us to deliver all of our previously planned investments, but nothing extra. Finally, option C, a 2% increase. We could limit the rates increase to 2%. This would be around 90 cents per week for an average value residential property. This smaller rates rise would impact on our ability to properly deliver all council services. It would also likely require us to forego or delay some planned improvements or investments in council facilities and services, and could result in higher interest costs for the council. Have your say. We want to know what level of rates increase you think we should have. Do you think we've got the balance right with a 2.5% increase, which will allow us to deliver all our planned investments, or should we do more and have a higher rates increase of 3.5%? With this increase, we could deliver everything we currently have planned and invest more money in things like transport, walking and cycling infrastructure and sports field development. If this is your preference, what do you think we should do more of? Or do you think we should do less and have a lower rates increase? We'd be unable to deliver our currently planned investments and services without putting our AA Standard & Poor's credit rating at risk. A credit rating downgrade would result in higher borrowing costs, reputational damage, and reduced access to debt markets. Decisions would also be needed about which investments or services are reduced. If this is your preference, what do you think we should do less of? Rating stability. We think it's fair for businesses to pay a greater share of rates than residential ratepayers. That's because businesses benefit from an additional use of services, infrastructure and transport facilities, which is why we think it's fair for them to pay a greater share of rates. However, we also think the current share of overall rates that businesses pay is too high and should be reduced gradually over time. Our current policy addresses this issue by applying a higher than average rates increase to residential ratepayers each year and a lower than average increase to business ratepayers. This will eventually see businesses paying a lesser share of the rates, but still more than residential ratepayers. For example, with a 2.5% overall average rates increase, our current policy of reducing business rates would result in residential ratepayers having rates increases of around 3%. Businesses would receive about 1.5% increase. However, we know that a 3% residential rates rise is viewed as too high by many. So we propose applying an equal rates increase to business and residential ratepayers in the 2017-2018 financial year. This would provide a fair and affordable rates increase for all residential ratepayers, though businesses would pay more than was originally planned. Have your say. Do you agree with this proposal? Paying for tourism promotion. To promote Auckland to the world, host major events and attract more visitors here, we spend around $20 million to $30 million of general rates money each year. That's equivalent to around 2% of the Council's annual rates revenue. This money pays for things such as international and domestic marketing, business events attraction, major events such as the NRL Nines, visitor information, destination development, and attracting international students to the city. This has resulted in the number of overnight stays in Auckland increasing from 5.7 million in 2010 to 7.1 million in 2015. This increase in visitors is good for our local economy, but it places pressure on our infrastructure. We propose to replace this general rates funding with a targeted rate on accommodation providers as the connection between visitor attraction and their customer base is strongest. We're not proposing to charge other businesses that benefit, such as restaurants, cafes and taxis, because most of their customers are Auckland residents. This targeted rate would allow Auckland Council to invest an additional $250 million to $300 million over 10 years in transport infrastructure to ease congestion in Auckland from increased visitors to our city and population growth. Accommodation providers such as hotels and motels will pay a rate that works out to be approximately 4% of their revenue. If they pass the cost of the targeted rate on to visitors, it would increase the cost of a nightly stay by around $6 to $10 for a typical hotel and less for backpackers and budget accommodation providers. We propose to replace this general rates funding with a targeted rate on accommodation providers as the connection between visitor attraction and their customer base is strongest. Have your say. Do you agree with this proposal? If the new approach is approved, we would create a new group including industry representatives to provide direction on how the money is spent. Paying for housing infrastructure. Auckland is the fastest growing region in the country. In the past 5 years, our population has grown by more than the entire population of Tauranga and is expected to reach 2.2 million in the next 3 decades. More people means more housing is needed, and it needs to be affordable. We need new ways to pay for the infrastructure to support the housing, in addition to development contributions and without large rates increases for all ratepayers. We propose changing our policy to allow us to use targeted rates on new developments, as well as development contributions to pay for that new infrastructure. Things like stormwater, wastewater, footpaths, roads, parks and more. A targeted rate would reduce reliance on general ratepayers and encourage developers to convert land into homes faster. It would also discourage developers from sitting on empty land while its value increases, a practice called land banking. If we don't go ahead with this change, we would have to continue to rely on growth charges or ask central government for new ones to fund the infrastructure. Have your say. Do you agree with this proposed change to our revenue and financing policy? The change would provide another tool that can be used to overcome critical barriers to getting more houses built right now, while also providing an incentive for developers to actually release land rather than land bank. Before any decisions are made on proceeding with a targeted rate, a detailed proposal would be developed for the Council to consider, as well as full consultation with affected parties. A living wage for Council staff. A living wage is defined as the income necessary to provide workers and their families with the basic necessities of life, and will enable workers to live with dignity and to participate as active citizens in society. It's currently $19.80 per hour, based on the published rate by Living Wage Movement Aotearoa, New Zealand. Based on council projections, we estimate it may increase to be around $20.20 per hour in 2017-2018. Currently, around 2,200 council staff earn less than $20.20 per hour. 66% of these staff are female. Our preference is to introduce a living wage for council staff, as we believe this is more equitable and the benefits justify the investment. It will ensure people working for the council can meet their basic cost of living, but we will make sure we do this without the need for higher rate increases. The additional cost is projected to be up to $2.5 million in 2017-2018 and $7 million per year by the end of the council term, with costs coming from existing budgets. At the same time, it will help address pay equity issues between male and female employees. We believe Auckland Council should play a key leadership role on these important issues. Have your say. Do you agree with this proposal? We want you to tell us what you think about these issues during today's event. We also want your feedback on some other consultation issues today, including the local board priorities for your local area. All the information you need on these issues is contained in the consultation document and supporting information. Thanks for coming and having your say on Auckland's annual budget.